It is with a very warm heart that we welcome you to today's episode of Tax Matters. My name is Olumuyiwa Matuloko, and with me on today's episode is Christina Pius.
Hello, viewers.
On today's episode of Tax Matters, we will be revisiting transfer pricing, TP for short. Today's story is coming from the proceedings of a stakeholders' engagement on filing of transfer pricing returns held in Lagos on Thursday, the 13th of February 2014. Host was the Federal Inland Revenue Service, and participants were drawn from the ranks of external auditors, tax consultants, and other professionals in the taxation subsector. These are people who already know what transfer pricing means. So that gathering was essentially to expose relevant transfer pricing forms, mainly the declaration form and the disclosure form. Just in case you need your memory refreshed as to what transfer pricing is, let's have you these clips from our archives.
Transfer pricing is simply when you sell goods and services to your related parties, anybody that has any relationship with you, including legal entities and natural persons, you must price it appropriately as if you were dealing with people that you have no relationship with, so that the taxes you pay are not unduly manipulated.
So let's look at a simple business. The husband is a farmer producing yam. The wife sells pounded yam.
Okay.
Now, the wife who sells pounded yam has a choice to buy yam from her husband, the farmer, or to go to the market to buy yam. Now, if he goes to the market to buy yam, he's buying from somebody probably he never knows. And therefore, they will argue on the price. And the woman will ensure she gets the best price.
Yes.
The seller will also ensure he or she gets the best price. Howbeit, her husband is a producer of yam. So she can as well go to her husband and buy yam. Now, the question now is, at what price does she buy from her husband? Now, if she buys at the same price, which she will have paid if she had gone to the open market, then we can say there is open market price, or what is called arm's length price. But if because the husband is her husband, and she just go there and say, look, I give you what I think I can give you, or the husband insists must pay one price, which probably is going to be higher than what the woman would have paid in the open market, then transfer mispricing has occurred.
Mispricing?
Yes. So the issue therefore in transfer pricing is actually not transfer pricing, but transfer mispricing, where prices are not at open market prices or at arm's length prices.
Yeah, that's very down to earth.
Down to earth indeed. But let's move a little higher.
Imagine for a moment that you bought a plot of land for 10 million naira in Lekki Phase 1 10 years ago. That land is currently worth 50 million naira. If you sell it, how much gain would you have made? 40 million. Governments will show up and say, thank God for this, your land. Based on the available records we have, when you bought it, you paid only 10 million. Thank God you have sold now for more than 10. Actually, sold for 50. Out of your 40 million naira gain, please pay what percentage? 10%. Government shall collect 4 million naira from you, even though government did not contribute when you are buying. But that's what the law says. Again, imagine another scenario. That same land, worth 50 million, you decided that you're not going to sell it for the market price because you're selling to a friend, to your spouse, to your sister, to your brother, your uncle, or your parents, whoever. And you said, because you are my brother, buy this land for only 20 million. And you agreed. You may even have documentation, including agreements. Both of you signed. Everybody signed. It was stamped at the stamp duty office. Your gain has reduced to how much? 10 million. And your capital gain tax should be how much now? 1 million. It was supposed to be 4 million before. Suddenly, it's now 1 million. And government is asking, why should I suffer? Because of your decision to sell this land to your brother, and you refuse to sell it at the market price. You know what? I do not care what you have done. I do not care what agreement you have in place. For the purposes of taxation, I would assume still that you have sold for 50 million. So please bring my 4 million naira capital gains tax. That is transfer pricing.
I tell you, there's nothing more to add. Christina has the rest of the story.
Date was Thursday, 13th February 2014. Location was an hotel in Ikeja, Lagos. And the occasion was the stakeholders' engagement on filing of transfer pricing returns.
The importance of today's event cannot be overemphasized. We all know that the first set of TP returns are due in the first quarter of this year, 2014. We have two forms, the declaration and disclosure form, which are key to the administration of transfer pricing. It is on this note that we are now gathering together to present those forms to us and how to complete the forms.
Acting Executive Chairman FIRS Alhaji Kabiru Mashi was represented at the event by Ms. Q.S. Segosime, the Coordinating Director, Chairman's Office at the FIRS. Thereafter, the declaration and disclosure forms were presented to the fully packed hall, after which participants expressed their views on the forms.
Each company or business entity that has connected taxable persons is supposed to complete and file that declaration form to FIRS. On the regulation states that the declaration form should be filed annually. However, because the information contained is going to be of long-term or fairly permanent nature, we are requesting our taxpayers to just file it once, unless there is a need to update the information. That's where there are material changes in the information of that entity.
For each year of assessment, a connected taxable person shall, without notice or demand, make a disclosure on the disclosure form or on any other form as may be prescribed by the service, stating or giving details of transactions that are subject to the transfer pricing regulations. Some keywords have been underlined. For example, it says for each year of assessment. That means the disclosure form is not a one-off form. It is a form that you must fill every year of assessment.
Two papers were presented, one by Mr. M. Ogbojumbola on the transfer pricing document and the other by Mr. Ajayi Bamidele on how to file transfer pricing returns.
When we talk about the transfer pricing policy, it is a document that contains the general principles that a group of companies will adopt with respect to transfer pricing. We believe and we expect every group of companies who will have to be dealing with one another, where the members are dealing with one another, to have a policy as to how goods and services and other intangibles are going to be priced when they sell to one another. The TP policy, therefore, is taking an holistic view and approach to transfer pricing before they ever occur. Before you even start making transactions, you already make up your mind, and this is how we're going to be dealing with one another.
When should TP returns be filed? The simple answer is when you are filing your tax returns. That is, when regularly, as soon as you are filing your tax returns. And we know for new companies or companies that have been in existence for more than 18 months, then 6 months, within 6 months after your year end. For PPT, now PPT is a specialized sector. They render monthly estimates. The TP, where their returns are not to be filed alongside with the estimate. I repeat, they are not to be filed with the estimates, but they are to be filed with the annual returns.
Tax Matters spoke to the organizers for further clarifications.
Why has transfer pricing become the new swan song?
It's about addressing tax evasion. It's about international best practices. It is about doing things rightly. It's about doing things in a transparent and efficient manner. it is also about the taxpayer themselves, so that they are not taxed twice. It's actually about carrying the taxpayers along. It's about doing things rightly.
Within the service, do you have the necessary expertise to drive this process? Are you prepared? Is the FIRS prepared?
We are more than prepared for this. The division is headed by a chartered accountant of over 20 years experience in taxation, and most of the officers in that department also have equivalent qualifications. Apart from that, they have been exposed to other tax jurisdictions. They've been sent for attachments to learn from other tax jurisdictions, and it is that experience they're bringing to bear here in Nigeria.
Transfer pricing returns are meant for entities who have connected persons. I mean, when we talk about connected persons, either they are owned by another company, or they themselves they own another companies, or they are a member of a group of companies. And these are the kind of entities who are expected to file transfer pricing returns.
So what exactly would you say constitute TP returns?
The TP returns, if you look at the regulation, the transfer pricing regulation, identified 3 important documentations. Number 1 is the transfer pricing declaration form. Number 2 is the transfer pricing disclosure form. And the third one is the documents that support the transaction to prove that indeed whatever we have done accord with the arm's length principle. These 3 major documents are what comes into the returns. But specifically, what we expect from taxpayers will be the transfer pricing forms, declaration and disclosure, the audited financial statements, and then the tax computations. All these won't come together to form returns that will be submitted period to period.
This TP, this transfer pricing, is it every corporate taxpayer that it concerns?
Well, the answer is yes and no. Yes, in the sense that to the extent that you have a connected or a related party, if any organization has any connected, as we put it in the regulation, connected means a lot. It means relationship in terms of shares, in terms of major distributor, in terms of controlling interest, in terms so many things that are involved in the. But as long as that activities of yours can be influenced by another action of another party, then the issue of connection comes in. Then you have to render transfer pricing. It is no where you are your own and you don't sell to any related party. And these are very rare. In some countries, they are looking at cross-border transactions only. But in Nigeria, it's not limited to cross-border. It's also included all those activities that occur within the country that are between related parties.
Who determines whether I am involved with transfer pricing or not?
Well, the determination of whether you have related person transactions is a function of what you do. Yes, an individual may say, oh, I don't have anything in relation to that. I don't have connected persons activities. But you need to really understand where you are in doubt. It's good that you visit the division or you ask any of us questions on this type of transactions. Because if you say you are not involved, and eventually we find out, because activities will come as we are examining the relationship of other companies, your name might feature, and then that shows that you have a relationship. And then we'll now start to find out whether you have actually disclosed it to FIRS that you had a relationship and your transactions have been treated as such. And failing to do that brings some sanctions against your organization. Therefore, where you are in doubt, it's better you come to FIRS to come and confirm your status.
Looking at hypothetical situations, at scenarios, my company has January to December as its accounting year. And so, by law, I have to file my tax returns by 30th of June of the following year. This basis period that you keep talking about on transfer pricing and the fact that it's just taking off and people are just being expected to start filing from January, February 2014, with this basis period, as defined by you, affect my financial year?
The answer is no. The basis period is a taxation terminology, and it simply means that the period to which your returns will be falling due. In the regulation, it is said that the basis period commencing a day after August 2nd, which simply means that if your annual financial year starts January, then August that year is like a free, August to December is free period for you. Therefore, you will be excluded from that. We'll now start looking at a period starting from your 1st of January to December of 2013. The question does not affect your accounting period in any form. Rather, it takes cognizance of it and saying, rather than imposing it in midway, it says start afresh from a particular date that will come in future.
Finally, sir, what are the modalities for filing TP returns?
The modalities for filing returns is very, very simple. And to the extent that already you have been filing your annual returns to Federal Inland Revenue Service. And among the things that you file to Federal Inland Revenue Service is your tax computation, your audited account, and the analysis of your fixed asset. In this one, the only addition to that one that is required is that you also complete the form, and the forms have been there. All you just need is to fill in the fees that are, or populate the fees that are in those declaration and disclosure form. Those are the things. And when you are rendering your returns to the regular office where you have been filing, that is also the same place that you submit. The only thing is that you envelope it and title it transfer pricing documents.
Fertile minds, these, I bet you, are the ones that will take Nigeria to the next level. One is, however, not surprised. Such fertile minds can only come out of organizations who painstakingly plan and develop their human resources, even as they do same for other resources. This was further amplified when between Thursday the 30th and Friday the 31st of January 2014, the Federal Inland Revenue Service held its annual beginning of the year retreat, at which it looked back on the previous year 2013 and made plans for 2014. And I tell you, the two-day retreat actually concentrated on the human mind, as espoused here by the chief facilitator of the organizing company. What do you think you would expect to be the result, the outcome of this retreat?
What we do as consultants is to get these people to refocus on their jobs, to give them new energy on these jobs, so that when they go out, they interact with these people where they collect the tax. There will be a kind of cordial relationship. And if there is cordial relationship, there will be buy-in. If there is buy-in, citizens will start to pay taxes even without the officers visiting them, because they understand the purpose, the goals, and the reasons why taxes are to be paid. It is part of our civil responsibility to pay taxes so that we get the necessary infrastructure, the necessary basic necessities we need as citizens.
Several papers were presented with a view to achieving the objectives of the retreat, which is corporate solidarity for high performance. Tax Matters sought to find out if the participants shared in the ideals or objectives of the retreat.
Of course, you will see that even from the type of papers that have been presented, they are all geared towards, first, the concept of teamwork, because whatever we're doing in FIRS, we don't do it in isolation. Whether it's in our individual capacities, as an organization, we work within a particular framework. So they have emphasized the usual things, team building, teamwork, understanding, the organizational goals, vision, leadership, things like emotional intelligence, how to relate with your colleagues, how to work with your subordinates and to work with your superiors, etc. So these things are very important, especially for an organization like the FIRS that is becoming bigger and bigger. And of course, our main mandate is to raise revenue for the government of Nigeria so that we can have good roads, infrastructure, etc.
The whole essence is to capture right the dreams and aspirations of the service for 2014 to enhance our productivity, to enhance our collections and enhance our cohesion as a working team.
All the time we're talking about collection, we're talking about our targets, we're talking about the processes and programs we have to meet our target. But this time around, we wanted a kind of detachment from those hard technical issues to the softer side, which is very important because now we're focusing on the people per se. We're focusing on the people who are going to meet the target you're talking about.
How will this affect your own work as a member of the team?
Okay, I supervise internal affairs department, which focuses essentially on internal controls, which is about looking at loopholes and blocking them. And I think with what I've heard today, I will do a lot better. I now know how to maximize use of resources, maximize very scarce resources because I don't have a lot of resources. The manpower, how to utilize the very lean manpower that I have, and then how to focus on results yielding audits, internal control audits.
It has given me another perspective that as an individual I need to look at things holistically, look at it from the overall picture of the organization, not on in a parochial way of only as it affects my office or my work only, but how does it impact on the whole organization goal and objective of FIRS.
All the leadership in the regions are present in the retreat. It's them that are actually in the field interfacing with the taxpayers. So it was important to go through the challenges they face and everybody understands where they're coming from and then begin to articulate, especially relationship between the head office and the field offices. We are all chasing the same goals. It doesn't help for people in the field to say, oh, the head office people or the head office will be saying people in the field. We are the same organization pursuing the same goal. So it's clearer to most of us on how we should work together going forward.
How will this impact on your performance as a member of the larger team?
Yeah, definitely it will impact on our performances across board, attitude to work, and to reflect it upon our general staff.
Like I said earlier, the most important thing for us is to have like a consensus. The good book says that can two work together except they agree. Likewise, can 10, 20, 50, 1,000 work together unless they agree. So, of course, given that you cannot bring the entire staff of the FIRS to come and discuss, what the retreat does is to bring top management to say, okay, let us agree. What is our strategy for the year? What are our goals? What are our objectives? How are we going to achieve them? And then we cascade it down so that, you have like the paper on change management, you have the change champions, you have those people who will go back to the offices, go back to the regions, go back to the, LTOs, ITOs, etc., and then spread the message.
Every day, my people, they for work. Some they do office work. Some get it them own business, so all of them want good road, constant power for better life. Whether now office work, oh yeah, pay your tax. Whether now your own business, oh pay your tax. If you want a better life, oh pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
And from the commanding officer of tax collectors in Nigeria, what have you decided on to at least increase revenue, because that is your mandate?
Well, there are areas where we think we should do more, like vigorous public enlightenment, like ensuring that registered taxpayers come and file their returns on time. Like intensifying tax audit, even enforcement. There will be a lot of enforcement this year, more enforcement this year, in order to beef up non-oil tax revenue.
You know, one gets this distinct impression that the Federal Inland Revenue Service is a model government organization in Nigeria.
Yes, I agree with you. They're actually working on a lot of things and there's improvement.
Do you agree? Contribute your quota by paying your taxes. It pays to pay your tax. And on that note, we ask you to join us on this same station next week, same day of the week, same time of the day. Have a blessed week ahead. From Christina.
Thank you for watching and bye for now.
Bye for now.